Okay, now we're going to introduce our guest as we see a 128-point gain on the Dow. Of course, the Dow has 3 new entries that we just mentioned. They are all doing extremely well. Let's talk to Randy Warren about what's happening with the markets from Warren Financial Service. He's the chief investment officer there. He says the best way to play the market is in equities, and he's got 3 top picks. Also, Larry Shover, our standard bearer from the pits of the CME. Larry, I want to start with you, and I call it a relief rally because of the news on Syria. By the way, we should mention, we just got this as breaking news. John Kerry is going to be meeting on Thursday with Russia's foreign minister, again, to talk about this plan that started as something that accidentally came out of the mouth of John Kerry. Then it turned into reality as the Russians and the Syrians turned it over. Now it looks like it might become policy. But is all this a relief rally, what we're seeing in the market?
Yeah, I mean, another way to put it is that it's a painful rally. It's something that started at the end of August. People were downsizing their exposure to the stock market with the minefield of things around us, Syria, tapering, what have you. People were very worried. And as things go, we see a tremendous, impressive rally. 8 of the 9 last days up, 6 days in a row up. Right now, people are covering, they're chasing. They're still very, very negative. So for me, I think the pains trade continues to be on the upside because people have not bought into this yet, at least the traders behind me.
Now, Randy, you are an Apple stock fan. You recommend it. You've got it in your portfolio. What happened today with the stock? Why was it that investors were totally unimpressed by the new products?
Well, I think unlike the situation where with the Federal Reserve taper, I think in the Apple case, they did sell the news. They bought the rumor and pushed the stock up ahead of the announcement and then sold the news when there wasn't anything unexpected in the announcement.
But you would say buy the news, right? Are you still buying on this news?
Yeah, I think today's dip is an opportunity for you to get into a very, very inexpensive stock. There's still a lot of innovation left inside of Apple. Lots of employees that are working hard every day to make that stock go up. And they're going to be coming out with more exciting things. Today's announcement was pretty good, actually. The biometrics that they're including in the new phone are pretty exciting.
Well, I got to tell you, I'm a stockholder as well of Apple. I've had Apple for quite some time now, and I was a little disappointed by today's news. I mean, there was nothing in there that we didn't already know, right? So why not sell on the news itself?
Yeah, for the short term, that makes sense. But in the longer term, they're coming out with the new phone has not only biometrics, but it also has the ability to measure movement. So for exercise, that's going to be a really nice feature for people who take their phones with them when they go to exercise or go to the gym or just want to keep track of how many steps they take in a day.
Now, Larry, I don't want to focus on the bad news on this day when we have triple-digit gains in the Dow. There was a lot of good news around, but we did see a rise in interest rates again. For a couple of days, we'd had a slowdown in interest rates. They're picking back up again. I think it was 2.94 at end of the day,
right,
edging closer to that 3% mark on the 10-year yield. And, of course, housing. Everybody is worried. 2.96, by the way, is where it ended today. It has had an effect on housing. There's been a slump in housing demand, and a lot of people would say it's because of increased mortgage rates, right?
Yeah, I think so, but let's look at the bigger picture. I mean, interest rates are still so profoundly low, and it is true we heard news that Bank of America, Wells Fargo might lay off employees because there's lack of mortgage interest right now. But in the scheme of things, looking at history, rates are still really low, and we have to keep in mind that rates are going up for the right reasons, that our economic data around the world is crawling up a little bit better at a time. Well, that's not to say that if rates jump to 3.5, that's going to be good for the market, but right here at 3%, what's the big deal? I mean, it's going to cut some people out of the market, and that's a tragic situation. But I still think we're in the baby steps of a big recovery in the housing market.
Right.
Let's remember, okay.
Well, I was going to say, some people say it's tragic that a lot of savers are not able to get any kind of return on their capital because rates have been artificially held so low for so long by the Fed. And, Randy, that's going to change soon. When it does, what happens to the market?
Yeah, the key point there is that rates are going up for the right reason. The economy is improving. We'd all like it to improve faster. I'd like to see a GDP print over 3% sometime in the next 6 months. We might get there, we might not. But what's going on in China is exciting. Europe looked like it may be bottoming at this point. So if that economy is getting stronger, then housing is going to do okay. People are going to get jobs that don't have jobs now, and they're going to be able to come into the market.
By the way, let's talk about a couple of your picks. I mentioned Apple, of course. Visa, it's a new entry into the Dow Jones Industrial Average. We saw a bump today. Is it too late to get in on Visa, Randy?
No, Visa's had a nice run, but what a fantastic company. They don't take a tremendous amount of credit risk. They don't loan the money. The banks are behind them loaning the money. They're just taking a piece of every transaction that happens electronically, which, by the way, Apple may be able to get into that business as well with the new biometrics. What if you could do transactions more easily on your phone?
Yeah, so that fingerprint model might be followed. It's going to be interesting. Also, by the way, retailers getting hit bad. We had a lot of bad news a couple of weeks ago. Retailer stock went down today. Urban Outfitters down 10%. You're going with a retailer, Under Armour. Why do you like them?
Under Armour's fantastic. They continue to innovate. They continue to come out with new products, and they continue to expand their global footprint. They're trying to move out from just being a U.S. kind of centric company into more of a global company, moving into things like the Tottenham Hotspurs, English Premier League soccer, sponsoring those sorts of things.
Randy, I got to remind you, it is such a fickle market. That is one reason why retail is so hard to get a hold of. Why isn't Under Armour part of that fickleness of the consumer?
Yeah, it is. If we were going into recession, then you wouldn't want to be in Under Armour. But we're not going into recession. The economy's getting better. So more and more people are able to afford the little luxury of an Under Armour type of product.
Okay. Well, on a day when the market is up 127 points on the Dow, let's keep it with a positive tone. Clearly, investors feel that way today. Good to see you, Randy. Thank you very much. Randy Warren, appreciate it. And Larry Shover, we're going to check in with you in a couple of minutes for the S&P futures close. Thanks, gentlemen. Well, the waiting is over. Well, the S&P futures is going to be closing in just a couple of minutes. Let's head back to Larry Shover. He's in the pits of the CME, and to our own Sandy Smith in our newsroom. We've got about 2 minutes before it closes. Sandy, first let's talk oil. It is down about 2%. I'm wondering if it has finally peaked. Has all the bad news in the Middle East kind of settled enough so that oil will keep coming down?
Not a chance. This market's definitely been focused on Syria, but oil's been rising for other reasons, raw fundamental reasons like tight global oil supply. When you get this news out of China, Japan, that these kind of economies are blossoming and they are getting bigger and they are improving and strengthening, David, you're talking about the world consuming more oil. So we didn't just get to triple-digit oil prices because of fears over a strike in Syria. We got there because of a tight global supply, and that's not going away anytime soon. So what we're seeing right now, Dave, is just that fear premium coming out of the price right now.
A $2.25 drop in the price of oil in one day, Larry Shover, is nothing to sneeze at. I mean, if that direction keeps going, we could get below $100, could we not?
I don't think so. I think Sandra is spot on. I mean, all we saw was the risk premium being taken away. Let's remember, North Atlantic Basin production growth is enormous, but it's being offset in a huge way by production that's very, very tight across the world, especially in North America. So we have a glut of oil that cannot be produced right now. So it's going to be a long while before we see $100 oil, at least in my mind.
Well, we should get busy producing and get those pipelines going and get that fracking done. Boy, we could be self-sufficient.
Perfect world, David.
All right.
Yes,
Sandy, Larry, great to talk to you both. Thank you very much. Well.